Welcome to the tutorial of bookkeeping mga ka-students. Before we proceed in the topic about periodic inventory system, don't forget to like, share, and subscribe to our YouTube channel and click the notification bell for more upcoming videos. So this is the second video for periodic inventory system. In this video, we will proceed in doing financial statements. This is just a continuation on the first video. So if you still didn't see the first one, please watch it muna before you watch this video in order for you to understand and comprehend well. In making financial statement, first thing we do is we need to compute how much the cost of goods sold for the month of June. So, in making statement of cost of goods sold, first put a header in the center, and it must contain the name of the business, the word statement of cost of goods sold, and the date with an introduction of for the month ended. After that, we proceed to the formula on how to compute the cost of goods sold. In the formula, it includes merchandise inventory beginning. But in our problem, we don't have merchandise inventory beginning because Chrisjiv Merchandising is a new business. So, merchandise inventory beginning, 0. Purchases, 62,500 less purchase returns and allowances, 1,500, purchase discount, 390. So net purchases is 60,610 plus freight in 800 pesos. So the cost of goods available for sale is 61,410. So less merchandise inventory end with a balance of 31,210. So the cost of goods sold is 30,200. So note that the merchandise inventory end is not yet recorded in our journal. This will be recorded when we do the closing entries. And now, we will make an income statement in order for us to know how much profit we earn on the month of June. In putting a header, it is still the same on how we put on the statement of cost of goods sold. The only difference is that the name on the middle lane. So, sales is 49,500 less sales returns and allowances, sales discount. So, the net sales is 47,960 less cost of goods sold with a 30,200 balance. So the gross profit is 17,760. So less all the operating expenses with a total of 9,800. So the net profit is 7,960. So after we computed the net profit, let's move forward to make a statement of changes in owner's equity. So the header of this does not include the name of the business. So the formula is Chrisjiv capital beginning with amount of 200,000 plus net profit of 7,960, and we don't have an additional investment, so 0. So the total amount is 207,960 less withdrawal with a 5,000 balance. So the Chrisjiv capital end is 202,960. The next step we do is making a balance sheet. We must not forget that at all times to make a header if necessary. So the header includes the name of the business, the word balance sheet, and of course the date with an introduction of as of. In balance sheet, you see that asset, liabilities, and owner's equity. In asset and liabilities, you must separate the current and non-current in order to verify and will easily determine. So in the balance sheet, the liabilities and owner's equity are combined because asset is equals to liabilities and owner's equity. So the current assets are cash and cash equivalents, receivables, inventories, and prepaid expenses. So the total current assets is 207,960 and the non-current assets is 15,000 with the property, plant, and equipment account title. So the total asset is 222,960. So liabilities and owner's equity. So the current liability is the accounts payable. So with the amount of 5,000 and the non-current liability with an amount of 15,000 account title notes payable. So the total liabilities is 20,000. So the owner's liability, Chris capital N is 202,960. So the total liabilities and owner's equity is the same as the total of the asset. So, if the total asset is the same as the total liabilities and owner's equity, then you are good to proceed to the next step of the accounting cycle. So, in bookkeeping, you are required to make a statement of cash flow and determine all the activities, whether it is operating activities, investing activities, or financing activities. So you can just easily do this when you will see the ledger for cash as your guide to make a cash flow. So the next step is closing entries. In closing entries are prepared at the end of the accounting period to zero out all nominal accounts in the ledger. So this is done so that the transaction during the period will not commingle with the transaction in the next period. In closing entries, all income accounts are debited and all expense accounts are credited. So the resulting balance is recorded in a clearing account called the income summary. And the balance of income summary is close to the owner's capital account. Any balance in the owner's drawing account is close to the owner's capital. So first we will close the sales and its related account. Note that the nature of sales is credit and the related accounts are debit. So to close the sales, we have to put it in the debit side and the related accounts on the credit side. The same goes as for the rest. So after making closing entries, you will post it back in your ledger. And this will be the form of your ledger after posting. So next is post-closing trial balance. So these accounts are the accounts that we do not close. The asset, liabilities, and owner's capital. So by making this, don't forget to put the header. Includes the name of the business, for what purpose, and the date with an introduction of as of. So as you would notice, post-closing trial balance is the same as balance sheet. So the same account titles and amounts, but different style or form. So post-closing trial balance is more precise to see than balance sheet. So that's all for this video and thank you for watching. And please watch the next video about perpetual inventory system.